Today we're going to be discussing building wealth with real estate. Hi, this is John Teixeira at RE/MAX, Mansfield, Texas. Welcome to my video blog. Today we're going to be discussing building wealth with real estate. But before we do that, I'd like to draw your attention to two links on my video blog. First, if you're looking to sell a home, click on the free home value report link. If you're looking to buy a home, click on the search all homes link. Now back to our topic. Since the beginning of time, people have been using real estate to build wealth. Most of the wealthy people in the world have done it either directly from buying and selling real estate, or they've done it through indirectly by leveraging their real estate to fund other business ventures. It's something everybody can do. It's extremely important for your wealth, and everybody should do it. The first step would be to own the home you live in. That's the easiest and best way to start creating some wealth for your family and for your future. It is absolutely true that homeowners have a lot more wealth than renters. And homeowners' wealth continues to grow exponentially over the years. A renter's wealth only has the ability to grow as much as they can grow it. In addition, our current interest rates make it really attractive for the individual investor or home buyer to buy real estate and use it to help build wealth, because interest rates are so incredibly low. If you saved that money and put it into a mutual fund, you would not reap the reward that you would get from putting it into real estate. Mortgage debt is the only debt that is good debt, especially when it's as low, interest rates are as low as they are right now. You buy that house in 2015, it'll appreciate over the years, so that when you sell that in 2020, 2025, 2030, that appreciation continues to grow up. As that appreciation is going up, your principal loan balance is going down because you're making that same payment every single month for 30 years. One of the benefits from going from renting to home ownership is you know what your payment's going to be for 30 years. It may go up a slight bit due to taxes and insurance, but for the most part, your principal interest payment will be exactly the same, and you'll be able to count on and budget that payment for 30 years until you pay it off or until you sell it. So while you're doing that, you're paying down the principal little by little every single month. Your value is going up. I know some of you were thinking, yeah, I had a house and it went down in value X amount in 2006. Well, that may be true, and if you look at a history of appreciations, it just continuously goes up. It trends upwards over the course of the years. You may have a few dips in the market, but you just need to be patient and wait through those dips, and traditionally your appreciation will continue to go up and up. So that difference between your appreciation and your current principal balance is what we call equity. And that's where wealth is built. And you'll see from this slide that equity can start being built really quickly, especially after year 4, 5, 6. And the farther you go, the quicker that equity spread expands. There are other benefits that help you build wealth. You get tax benefits. Tax benefits are huge, but you know what? That's a bonus in my opinion. So don't forget, if nothing else, you should at least own the home that you're living in. If you're currently renting, do what you need to do to buy a home. If some of you may be able to do it now, some of you need 6 months, some of you need a year, but I would encourage you to call a great lender and find out what that path toward home ownership is, so that you can get there in the earliest possible time frame. It's really important for your family's future wealth building. My partner, Trevor Kerr, at 972-822-7408 is very consultative. He can tell you exactly what you need to do, show you that roadmap, and how long it will take. If you currently own your own home already, you should consider buying more real estate. If you're taking money every month and putting it into an IRA or a 401k, I'm not saying you shouldn't do that, but you should consider taking some of that or some of your savings and start putting it toward real estate. For minimum down right now, you could buy a house for 5, 10, 15, 20% down, whatever you choose. And you can rent that house out for the next 10, 20 years, 30 years if you choose, depending on your age, and make money while you're doing it and build God's amount of wealth. That slide that I showed you can happen over and over and over again with each house that you buy. So I would encourage you to consider it. I have another slide here for you also that describes the cost of waiting to buy. Cost of waiting to buy, basically in a nutshell, is a chart that shows you how much more it's going to cost you if you wait a year, 2 years, 5 years from now, because of the increasing interest rates that we expect to have happen. So thanks for watching our video blog. Don't forget, if you're thinking of buying or selling a home, call us or email us today for a free consultation. Thanks again. Have a great day.